Let's kick off with the recording. Today is December 7th, 2015, Monday evening. This is Frank Clueless 8. I'm having a quick market update webinar for the benefit of my members and free trial subscribers. So that people will, be a little bit more in tune with what's going on. First and foremost, most important thing that you can do in this business is to have the right platform where you can see the visual charts. I don't need to go ahead and explain the basics 1, 2, 3, but if you don't if you really can't see what's moving in front of you in the form of charts and screens, then you shouldn't be trading. You shouldn't be investing, to be honest with you. Somebody mute their microphone because my voice is coming back to me again. So bottom line is that I like to keep things simple. People who have been my members for a while, people who understand how I operate, they know that I cut the fluff out and just get straight to the point. And that's just the way it is. And this is a tough business. It's a really tough business if you want to be consistent. Everyone can get a quick hit here and there. But then what? Nothing. So if you want to be consistent and have longevity in the business, then you have to suffer a lot of blows and pains, and then you need to really work. Now, work doesn't mean you have to stay up till 3 in the morning trying to figure out what a chart looks like. It means that simply that all the stuff that I'm producing, and there's a significant amount of content that I produce, a significant amount, you just have to understand it better. There are many outlets of doing that. You can sign up for the group coaching sessions. You can listen to these webinars. You can really study the Twitter feed all through the day when there are at least, I would say, good anywhere from 30 to 40 posts. Majority of them are charts. The comments, read the comments. And if you can, then you go ahead and participate in the chat room where there's a lot of discussion going on what's happening. There are great traders there. A lot of them have their own style. They're doing their own stuff. They're picking up some of my recommendations. They're doing all kinds of stuff. But that's only for people who have the time to do it, in the chat room. So I understand that part. But if you don't really go back and review every single night, really every single night, if you really want to be good at what you're doing, or instead of just like all frozen and mute when markets are dropping crazy or they're moving like a rocket up like Friday, and you don't have any real positions that's making any money, so all of a sudden some people making stupid comments. There is not always a next time. The next time is now. The time is right in front of you. And it doesn't mean you have to trade every 5 minutes. There are certain days don't trade. It simply means that you have to act as needed and not be a chaser all the time. Majority of people are chasers. They feel good. Oh, market's going higher. Then what? Then they get slapped on their head. But we've seen that way too many times. And the point is, hey, Jasco, how are you? And the point is that you gotta somehow or the other, as people are joining in, we're talking a little bit about the behavioral part of the market, which is the most essential part, to be honest with you. So what we're talking about is that people really need to do. I'm just going to rewind a little bit. What I just talked about is that people need to really do some homework. I mean, you got to do it. And part of the homework is being involved in the group coaching sessions. No question about it. No question about it. And if you think that I charge a lot for my service, then you're living in a different planet, because I'm going to show you something that's going to blow your mind away. And this is coming off StockTwits. This one example I'm going to show you. Okay. So the bottom line is, you got to do that. You got to look at the least you can do is you need to review the charts, and very powerful charts, right or wrong, very powerful charts. Maybe they're not working right there on that same day, but they'll work, because most of my stuff works. No question about it. Now, the timing is sometimes gets screwy because of volatility. We take a little bit of a scenic route or an ugly scenic route on the way to where we want to go. So the trade management part is tough business, and that's something you got to figure out on your own, honestly. Because I'm not going to walk somebody through holding their hands how to manage their own trades because, repeat again, I don't know how much you're playing with. I don't know what your risk tolerance is. Well, I know a lot of people what their risk tolerances are just by knowing them a little bit, but I am not going to babysit somebody in their own trades, primarily because I am not their broker and I don't want to get that deep in managing other people's or even coming close to thinking about managing other people's money, because that's not what we do here. This is an educational service, and full disclosure before I go further that this is purely for financial education and not for any solicitation or advice. I am charging a very minimal charge every single month to cover primarily a lot of administrative costs, and beyond that, the ancillary services are also kept at a minimal to benefit people. Period. That's it. End of the story. So the bottom line is that when people are not doing what they should be doing on their side, and still making the same fundamental mistakes, both on the behavioral and the trade management side, well, I have nothing to say. Now, saying all that, the market is a dangerous place. Let's not fool each other, okay? This is not your grandpa's market, like my favorite line goes. Just the way that Zero Hedge article, talking about this is not your what dad's market or something they said. This is a market which is run by machines. I don't care how many times you hear it from me, I'll say it again. So if you don't respect the machines, and my levels are so close to what these algos do, using my different platforms and all kinds of stuff that I do, they almost mimic what the algos are going to do. So therein lies the word volatility. Now, if you think that volatility is a cakewalk, well, you obviously are fooling yourself to a level. Just because you get one or two hits, okay, traders do. They think they're frigging heroes. Really. They think, oh my God, I'm really good at this. No, because it's consistency that matters, not the 1-2 times. Oh, I got a big hit. Okay, yeah, the stock went up. So big deal. My dogs and cats can pick its, put their paws in a stock and say, okay, and woof, maybe it'll go up in 5 days. It doesn't work like that. So there's a method to the madness. Now, if you don't focus on the method, then you're focusing on the madness, which unfortunately, I'd like to say, I hate saying this, most people do. And many people in my community do, in the Clueless Day trading community. And it's a shame. It's a real tragic shame. Look, this is a big boys and big girls game. Okay, so if you think that somebody's going to sit there and listen to your sob story about whether you lost money or not, believe me, nobody will. Even you'll get tired of listening to your sob stories. Only then maybe you'll change. Now, feeling crappy about something and making a comment here and there, that's not a problem. But to being relentless about the sob stories, what can I say? It is the worst, most detrimental thing you can ever do for yourself or for what you're trying to do here on the trading or even in the investment side. Nobody wants to hear your sob stories. The market doesn't give two craps, right? About what you're doing. The market's going to do what it's going to do. There is nothing fundamentally crappy about the market. Even on bad pullbacks, there's nothing really, there's a lot of stuff going on, which I'm not going to get into right now because I've covered them pretty extensively in my video cast. So for newer members like Jem, who are joining, at some point you need to go listen to my video casts, which are directly posted, many of them for free, like this one will be put up there. I don't put all the group coaching sessions up for free because people are paying for them. People are paying a nominal fee to interact and learn a lot of powerful projections, forecasts, techniques, which if they utilize effectively, makes them a lot of money. So, but things like that. So go ahead and listen to it. So, so that's it. Now let me show you something here, which I want people to see. And this is not I'm not rubbing myself over my ego and say, oh yeah, this is it. Just read this crap, okay? This gentleman, I'm sure is good. He's a day trading stock. It's a day trading business, okay? This is it's in StockTwits. Call him. Pay him what he's asking for. Please see. And he's talking about day trading. And I'm sure he day trades well. Mr. Singhal is paying him. You see these numbers, ladies and gentlemen? Okay? Just to evaluate a client system, he charges $2,000. Coaching for 6 months and 10 hours. Wow, what is the 10 hours? 5,000. I'm not mocking the gentleman. He's good. I'm sure he's done what he's doing. Does he give you the insight on the market like I do and attack the market at inflection points when nobody wants to touch the market, or go short the market when everybody's all like, dancing on the hot tin roof, or not everybody, some people are. No, I'm sure he doesn't, because I look at a market in a very, very unorthodox variant fashion that very few people do. Does that make me a genius? Absolutely not. It just makes me hit certain levels which are hugely profitable at given times. And the other thing that people learn from my service, without having to pay $17,000, I'm sure some people are. I'm sure people are paying this stuff, because what is $2,000 if you're going to make $10,000 over let's say a week or a month or a day? Nothing. So in a way, what he's doing is actually right. He's not spoiling people. He's telling them, these are my fees and you do what you need to do. So the reason I wanted to show this, because I want to wake people up a little bit more, because there's a lot of people, and I'm not saying just in our group, who just never want to step out and say, okay, I'm going to pay $40 for almost 2 hours of massive intensive learning because I'm too stingy. And in the meantime, they're losing money right, left, and center. So what I'm getting at is, in order to fully understand, and I evolve. Okay, I'm learning every single day how to do things, and my brain, the neural networks in my brain, are constantly rewiring themselves to the new reality of what we're going through. The minute you think you know it, you don't. Believe me when I tell you. So what I'm getting at is, continue with what you're doing. I'm spending my time, giving the time to do that. So sign up for these sessions and stuff, because honestly, they don't put a hill of beans money in my pocket. I'll be honest with you. Spending two hours sitting there on a weekend trying to, so what is my ulterior motive? My ulterior motive is to make my business grow. My ulterior motive is, it makes my life simpler when I don't have to answer every single stupid question that comes along. Actually, no question is stupid. I'm wrong about saying that. But questions which are so obvious that if they did the homework, if they attended these sessions, if they did what they needed to do, that it would be so easily explained. But no. So my ulterior motive is to reduce my work pressure during the day, because there are very few services where the content provider of the service is constantly engaging their participants and their members. And sometimes what happens is that when you engage people more, they get spoiled. They do. And they expect an answer immediately. And if that answer doesn't work, sometimes some people, very few of them, mind you, start to get a little bit feisty. Well, I get to the point and I shut them up. Because the point is that there is a drawback to constant engagement with my I would say tenants, with my traders, because it's almost like Watson is at the IBM computer. Watson is at your disposal every 5 minutes. So going forward, I will certainly engage, but I believe I'll engage a little bit less, because it gets tiring. And I want people to basically do their part and do what they need to do. And if they don't like it, they can leave. It's okay. So, saying all that, now that I just want to make things very clear here, okay? You saw those numbers, okay? So why don't you take a last look at them? All right? Take a look at them. He's out there. He's got a whole, he's doing his thing. He's doing his thing, okay? And the point is that when you ever think of what I provide as content and serious, um, and by the way, here's the fun part. He's actually one of my followers. I came across him because of that. So he follows the Clueless 8 charts, the few that I post on StockTwits. So pretty interesting stuff. So point is that, like they say, get with it. All right. So Jason said, for reference, I've paid over 200 a day to day trade before. Works great, but do the math. Can you tell me which markets you trade? Okay, let me answer these quick questions first. G-Man, what country are you connecting from right now? He's writing on the thing. From the US. Okay. I primarily trade the US. By the way, how did you get referred to my site? I primarily, not primarily, I just trade the US markets, primarily equities. That's it. I use proxies for currencies, for treasuries, for oil to do what we need to do. I do not trade futures. I've traded futures before and I will go back and do it again, but I use E-minis all the time as proxies to what we do. And I use all the different commodities as not different commodities, but oil primarily as a proxy for what the markets are going to be doing. Okay, so I'll answer your questions later. Let me get straight to the thing here. I'm a stock guy, so I trade primarily stocks. That's it. I trade the ETFs, I do individual stocks, do a lot of options, and that's what we do here. I do not trade oil futures, and I just use them as a proxy for our trading. So that's why. And if you came here, he's saying he came here from StockTwits, then you know very well from my work that I show primarily individual stocks as conduits to making money. Simple as that. All right, guys. So let's get straight to the spies here. Now, I ask people that if they that start using as one of the things, the simplest form of charting you can ever do. Okay, the basic bar charts, the high, low, close, right? So start looking at it. I know it's something that, again, you got to have a platform that allows you to do that. I use 4 different platforms. I use Thinkorswim. I use this one, the free stock charts, which is Warden. I use the TradingView. I use the Ultimate Algo HFT charts, which are the bar charts that are offered by Quad. And it gives me a full picture of what the markets are doing. So let me pull up Thinkorswim here. And I don't want to get into any detailed analysis tonight. I'm just giving a quick overview of what the markets are doing. So here we are. Actually, let me go back to this here. Now, this is something that I've been showing for months. It's very easy to read. What is complicated is the forecasting part. It's easy to read because I'm doing the work for you. So when you look at this chart here on the SPYs, and you're trading the markets, you're gonna look at a lot of things here. Okay, you got these patterns here, which you got to start training your eyes to look at. Right? Look at these patterns. You get these very sharp volatility sell-offs. These are all structured volatility. And then you get you get down to these, get down and create a V-shaped move, which as within the next 24 hours starts to look like a pattern. This one, for example, can be looked on as a large inverted head and shoulders, which many of you know that if you've been following me. You got the head here, and you got the left shoulder. You got a right shoulder, which if you want to, and remember, head and shoulders don't have to be like linear, means they don't have to have exact symmetrical patterns. They can be stretched out and complex. So if you want to treat this as sort of the left shoulder, then this was the right shoulder. Then we kind of cruised along, went higher, and then we did this nice corrective move. It was a nice corrective move. And then on Friday, we went up big time. We traded all these patterns, and we did well with them. So now you have inverted head and shoulder here. You can again look at this as a left shoulder now, and you can call this a right shoulder. So simple stuff here, simple. So if we break the right shoulder, we're going down. All of a sudden, there's a trend change, minor trend change, because seasonality is stronger now than technicals. I repeat again that the middle of the month, the 15th, give or take the 15th, starting probably the 11th, which is Friday, we're going to hit some real turbulent moves between 11th and the 17th. Why? You should know the answer. Because the Fed meeting's there. They're raising rates. Just because you expect them to raise rates doesn't mean they're going to. And if they do that, the market might not like it. Because the market's a freaky animal. The market's like your husband, wife, girlfriend, boyfriend, whatever it is, what sometimes just acts wacky. So that's what the market is. It might be, if the market's up towards, and this is where the technicals come in, okay? If the market's up towards, it all depends on where we are before the Fed meeting, okay? Before the rate hike. So if the markets make a huge move before the Fed hike, and everybody's like all happy and like, you know, gets all giddy, and the chat room's really chirping, humming like a hummingbird, which is good, then it would be a good time to basically take down some nice profits. So at this point, very simply, this pattern should technically reverse itself. I mean, complete itself up in this range up here at the bottom end of this channel. Because once you enter this channel, okay, it's going to be a powerful move up, which needs to be sold again. So the powerful move up, I don't think we get up to 21, 218 on the SPYs, that fast, that quick. But bottom line is, I don't think we're going to 2160, 2170 on the S&P 500 that fast. But you never know. I think we hit a major roadblock as we try to enter this channel, and then we create another couple of waves down. And that would, and then if the market really wants to go, then we basically make a move up. However, now the critical point is, which I've said very clearly, is these Bollinger Bands down here. If they don't support a move down, in other words, they don't support a bounce here, then we're going to fall very quickly in this 203 quagmire, which is not going to feel good for anybody if they are long. So whatever you're doing, there is a risk factor, big risk factor involved. But risk is where the money is. Right now, as we speak, the futures are collapsing. They're down 8 points. Okay? And so at right now, looking at 1 second. Now, what the futures are doing right now is no bearing what they will do tomorrow morning, mind you. So looking at that, let me just show you 1 second where we are on the live charts. Okay. Forget the dailies. Look at the hourly. So the hourly, what's going on is this. This is worth 7.5 points here. Okay. So this is where we were. This is where we closed at 4 o'clock, looking all nice and pretty. And now we're doing this pullback here. Now these two candles, and get your eyes trained to this, because many of you have been working with me or does stuff on your own that or learning. You know very well what these two. These are the consolidation. But right now, we're basically engaging the 50 and the 34. As long as the 50 and the 34 lines, at least on the 1 hour, don't completely change direction, we're going to be fine. If it completely changes direction and heads south, you can rest assured that we will be in danger of falling a couple of hundred points fast. Okay, so saying all that, forget the stochastics and stuff right now. Yeah, we're overbought now. By the time we wake up, if we're down 10 or 12 S&P points, we're going to be all the way down here. We're all going to be all the way down here. Okay, and that would create a strong buying opportunity. My opinion is that my cognitive bias tells me that they want December higher. So before that, they're going to do whatever they need to do some big resets and make sure that most traders and most investors just do not want to touch stocks. And there's many reasons why that'll happen. There's tax adjustments, there's tax selling, there is what do you call it, the hedge fund complex. A lot of institutional funds are basically, shifting their books around. They're doing stuff in the month of December, all kinds of things, right? So I can't teach you in one day what an E-mini futures chart will look like. Yeah, there are guys who throw out so many numbers and waves and stuff, and guess what? They still get it wrong. So I don't really give two hoots about it, to be honest with you. And these guys are serious E-mini players. Yeah, if you want to scalp a point or two, if you're trading futures, that's a different story. But as in actual projections, I've been right on it pretty much more than 80% of the time. Whether it be projections from here, whether it be projections from here, whether it be pullbacks, you name it, because I'm a tactical bear. In other words, I will tactically short the market as necessary without getting dogmatic, which unfortunately most of the E-mini guys, generally speaking, they are. Okay, from what I've seen and just observed on different forums. So saying all that, let's draw this out a little bit and see what could happen here on the markets. So you have this straight up uptrend line. And by the way, extensor right. Okay, so you got this uptrend line here, which is around 2064. I have kept on saying that if we break this line, more importantly, if we break actually, let's throw this line out. Not necessary. Hold on. If we go below the what do you call it, below the 2040 level, well, I don't think we get there that fast, but let's say we don't hold the lows from Thursday 2040. Well, 34 points from here, that's still roughly about 200 S&P points to there. So obviously I'm not going to be sitting around looking at the market dropping 200 points, but this particular rising 50-day, if it gets tested and doesn't hold, then all of a sudden a lot of things happen which are going to mess up things on the long side. Okay, period. Now the downtrend line here is also in play at 2000. We're talking big numbers here. If you drop 70 points from where we are right now, then you're talking about a 400 and almost 400 to 500 point drop on the Dow Jones. Is it possible? Sure it is. Can it happen by the middle of the month or so when these things get really nasty? Yes, it can. Okay, yes, it can. And that sets up, if the market wants to finish the year well, which I think it does, because from a money management standpoint, the fund managers do want to print somewhat of a low single digit return for the year. So everything from now till the end of the year will be extremely amplified. In simple English, volatile. So if this happens, this could happen. Okay, you could create a dragon bullish pattern by simply falling apart and coming down 600 points, 500 points, which would be very dramatic. So I'm not going to write anything out because the way things are right now, it's everything's in flux. In the meantime, there's a lot of opportunities on individual stocks that I've been showing, which are working out great. Brings me to my one of my other important points. Don't keep on looking at the same old stuff. Oh, Priceline is just going to keep on bouncing. Why is Amazon not going up here? Guys, all those stocks overall have had some significant bounces. So when the adjustment period is going through the month of December, don't try to, we don't know which funds are selling, which ones are recalibrating and reducing the ownership in the form of percentage of the portfolios and stuff like that. We don't know that. So stop looking the same old. I'm not saying write them out. We traded Tesla today, fantastic, like a robot, for almost 75 to 80% in about what, 20 minutes? Most of the people started getting in there when it went green. Why not buy it when the actual reversal's coming? The charts are all there. Go look at it. I put it out there. Stop waiting for green always to buy, waiting for confirmations. Because by the time things are really confirmed, especially on a high, fast-moving, high beta stock, the algos are going to hit it real hard. You got to be a little bit one step ahead. Not all the time, because we also know one step ahead can incur pain. So that's where we are with this thing here, okay? Looking at what's going on with oil. Oil is actually up right now. And train your eyes to look at things. We used to call it this hockey stick pattern, okay? It's nothing but a falling wedge. You draw a line like this. And there is your dead. This is a falling wedge. What do falling wedges do? They break higher for behavioral reasons. There's a lot of shorts who maybe got in here. They're going to get their you-know-what handed to them very soon. And Tats knows that. All right? So the point is, you got to have some patience. Is it possible oil completely collapses down to the lower end of this of the Bollinger at 37, 36.98? Absolutely it can. It can lose 80 cents in 2 minutes. That's a possibility. However, overall on a swing trade, this falling wedge will work out and oil will head back towards 40. That's $2.50 from here, a little bit less than that, and that's a significant move on the on whatever you're playing, the USOs or whatever you're playing as a proxy for oil, the calls on the USO, the lottos and things like that. Okay. So the point is that you have to monitor charts. That's really what it comes down to. And it gets very difficult in a live market because all kinds of stuff are going on. All right, period. So anyway, I mean, what I wanted to get at tonight is not to go over the same stuff and keep on harping and preaching about the same things. What the lessons that you have to understand about this business is that you have to work hard to understand what you're looking at. You have to have a powerful charting system that allows you to play around and draw lines, and that's how you learn. When I look at this chart here on the daily, okay, forget all these internals for a minute. On the daily, regardless of the pullback today and the reversal, this is very positive because this was an inside day and a reversal tail right here. Short covering, and we remained inside the channel. Chart reading, I don't do traditional chart reading. I use a lot of traditional stuff. You have to use it, but I read things differently. I drew these channels myself, right? And you know how many times these things have worked out like magic, especially in high, fast-moving indices, in high, fast-moving momentum stocks and things like that. So guess what we did? The algos actually closed the market almost inside the channel number one, this one. Upper end of the channel is 2144, but before that we got some major resistances in the form of a downtrend line here, which should be in red, and right there 2109 on the S&P. And if we break out, then we basically have a move up to 2130, or possibly hit major resistance on this on the Bollinger here at acceleration band, actually, this blue line at 2112. So you got to constantly, like the brain, your neural networks in your brain constantly has to process all these things. It's not rocket science, trust me. But over time, your eyes get trained to looking at patterns. And that's the point that I'm trying to make here. Force your brain to look at patterns. Forget about all these huge, hardcore technical stuff that some of these guys put across. Good for them. They're geniuses. Whoopee. So what? It's arriving at the same destination. Maybe you're doing better by following a lot of the stuff that I do. In fact, you should be doing better following a lot of the stuff that I do, because those guys are always looking at technical patterns without having any predictive analytical value to it. Because if charts could tell the whole story, like Tad said today, charts don't tell the whole story. It's how you interpret the charts and what you draw above it, which tells you the story. And even that story keeps on moving around like a crazy monkey on a hot tin roof, right? Most important asset you have is your brain and your temperament. You have to have your temperament calm. You don't need to go in there with crazy amounts of money in a particular trade. And if it doesn't, remember, the bigger your trade is in one particular trade, bigger the amount of money, the more mistakes you'll make. Think about it and write that down. If you're doing a $30,000 trade on an option or a $20,000 trade in an option, because you're that bullish on it or that bearish on it, I can assure you, you will make some major fundamental mistakes in your decision-making process, because you'll be so nervous whether that 30 goes to 5 or whether it goes to 40. So you'll be selling earlier. You'll be selling at losses while the projection still remains higher. So play smaller amounts in varied stuff so you don't get caught in one. Look, we all make mistakes, but how many times do we get back from it to build ourselves up is really the question. Don't make severe mistakes. Make little mistakes, because if you don't make mistakes, then you are a bona fide, excuse my French, idiot. Mistakes and failures are what makes people and build character in life and in trading. That's it. So if you think every trade of yours has to be a right one, well, nobody goes into a trade thinking that's going to be the bad one, right? I mean, none of us do. But if you think that you're not going to make any mistakes on having the best intentions, but the market screws it up and you don't manage it right, and even if you manage it right, it doesn't matter. The hardest trades are the ones that produce the highest amount of profits. Mosaic didn't feel good 48 hours ago, did it? Exactly. End of story. But I saw different things in there, stuck with it. Valiant, another stock that we repeatedly made money on. And even I put it out today again, because I'm following different charts and what's going on. And guess what? It is not an easy trade. If you want an easy trade, buy Walmart and sit on it for a year. It'll go up $3. Exciting. You want an easy trade, buy a whatever. Buy a stock and just sit there. That's fine. There's nothing wrong with that. But the trades which deliver the highest amount of profits are the ones which are the hardest. And that's why technical analysis is so critically important. Looking at this chart here on a longer term basis, on the S&P 500, which is a proxy for the markets, when the banks really start coming in strong, higher, I believe that's going to happen as the Fed actually physically shows the proof and raises rates. Banks are going to run. So if banks run, then you should have the S&P 500 hit 2140, no problem. You think oil's going to just keep on going down to $20? Great. Now, like I keep on saying, give me free gas. That's great. Do you know what a huge boost to underlying savings globally if oil does crack more? So the bottom line is there is a huge benefit, which is not being completely translated into a huge growth spurt in global economies in the form of massive consumer spending, because the consumer is scared. So they're spending. Of course, consumer spending has been very strong. But so anyway, so if oil and banks start to move, you're going to see this move very fast, very quick up to the upper end of the channel. From that point, probably a corrective move to test the downtrend line. This is the downtrend line. Okay, the red one, obviously, and then possibly a move up. Do we get to 2220? Obviously not this year, but that's something that's, that's in the charts. So when somebody says, oh, the market might go to 2200 plus, don't look at it, oh, the guy's crazy. No. Now, is it also possible that the market breaks down, falls below 2000 and goes and tests 1860 again? Absolutely. Absolutely. But what I'm showing you is that it is in the chart. It's how we interpret it. And it doesn't matter. We're just mortals. There are machines that are controlling trillions of dollars that are moving at nanoseconds across the global. There are no borders, all these exchanges, all right? So don't think that we know exactly what's going to happen every 10, 15, 20 minutes. We can just do our best in figuring out what the projections are, and then we move from there. And that is what the markets do. So I'll just take a question or two, and then we're going to wrap up. This is just a quick update as we go into the week. So I just want to get people, in line with what my thoughts are. So if anyone has any questions, feel free to ask, or else we're going to wrap up in a few minutes. No questions? Vic says the same old question over and over again. You gotta love this guy, because he's short CMG, so he wants CMG to completely fall apart, which is obvious. So he keeps on asking me if it's going to go to 470 tomorrow. Great. Why don't you go to CMG? Let me give you a trick how it's going to work, okay? Really, Vix. You go to your local Chipotle. I'm sure the doors are still open. As you're walking out, you collapse, okay? You just faint. Just, oh my God. And you just do some sort of like spastic dance that, you're suffering from a massive E. coli attack. And you start like slapping your face and something like you're going mental. I can assure you that'll get reported in the papers and CMG will be down another 10 points. How about that? And if you have a couple of, celebrities with you, maybe, some guy that you know who's got a name around town, then that gets reported in the paper and CMG will go down another 20 points. Okay. So saying all that, so I just gave you a quick short seller attitude on CMG. You know how many fakes are going to go in there? So here is what CMG, I believe, is going to do. The short covering today was intense, no question about it. Believe me, I want to trade the stock. I did wrong by not looking at it on Friday. I admit that, because there was other stuff going on. We're doing well, like, whatever the case may be. So, but looking at CMG, let's look at it on a weekly basis here. Okay, on the weekly basis, you have massive support at 505. The stock is trading right now at where is it after hours? 1 second. I'm in front of my screen, so I should know. The stock after hours is 515. Okay, this is a very fast moving stock here. Remember one thing about Wall Street: they love Chipotle. E. coli or no E. coli. So the point is that a couple of basketball players apparently said that they were sick. That's what dropped the stock after hours. I put that news up there, right? So the point is that at this point, trying to chart a stock which is in massive flux is very difficult. But here's the way I look at it. And I might very well short it tomorrow. If the stock really breaks, you're going to $450 easy. No question about it. If the buyback machines go into effect, because CMG is doing a lot of strategic buybacks, right? So these were the original channels that are drawn. Original channels that I drawn. Let me see here. G-Man is saying that happened in Boston today. What, somebody fell over and acted like Vix, attacked by E. coli? I mean, I shouldn't joke around. I mean, E. coli is serious stuff. I don't, I'm originally from Boston, so I didn't even know they had a Chipotle in Boston. I'm just really kidding. Okay, 1 second here. So looking at this chart here, it's obviously not a chart that, somebody wants to technically buy, but at the same time, it's a very powerful company. And don't forget one thing: this is a danger to major shorts. Little shorts like VIX is doing is fantastic. That's great, man. You move fast. You have a couple of puts out there. You just, you're not like going out there and just saying, okay, this is it. This is my trade of the century. I'm just going to make $1 million off E. coli. So that's not what you're doing. So that's fine. So looking at this massive cup breakout that happened on October of last year. Okay, that's at 445. My take on the stock, based on what I had done the original charting, you can pull up the stock, the the charts on that, was looking at, and I'm just simply drawing channels, all right? Let me just show you. So if I drew this and then I drew this one, so you're looking at somewhere between 450 and 460. Is it possible that the stock collapses another 55 points? It is, but given the ferocity of selling, given the short covering that's going on, that's somewhat unlikely. Just letting you know that. Okay, that's somewhat unlikely. So if it is, no, Vix, you're doing the right thing. You know, believe me. I mean, if I wasn't concentrating on a lot of the other stuff, you know, this would be something I'd be. I saw this. I'm going to concentrate on tomorrow. How about that? Okay, I'll play some of these things here. It's a fast-moving stock. The risk is that what if they identify, and seriously, what if they identify, because they're working very closely with the CDC. The CDC, even though they whacked the stock the first day, remember the calls went from 3 to 48. I mean, it was just out of control. So the point was, I mean, sorry, not the calls, the puts. It was a huge day. Was that that the CDC is working hand in hand with Chipotle. All right, they don't want this to spread like crazy. So what if they find the source of it and eliminate the source? You know, go in there with a AR-15 and kill all the chickens. I mean, I think the source is coming out of some local farms or something on the lettuce side, on the produce side, I believe, right? On the produce side. So the point is, what if they actually find it and clean it up? The stock will jump 100 points, like boom, just like that. So remember one thing about investing and trading. Um, don't always trade the obvious. This basketball players, you know, these guys got sick. Like news that came out after the market. That's a gift. That's a gift. And if we could trade options after the market, you should have covered it, because we don't know what exactly what they're going to come up with tomorrow. They're not sitting there in the butt. This is a world-class company, billions and billions dollar worth of market cap, right? Ex partners, not partners, ex top management from McDonald's. So these guys are serious guys. So you have to give these management their due. So the point is that they are head on attacking this particular issue. They'll find the source. You know, it's not like they're looking for ISIS in the middle of Syria, right? They're looking for some bad chickens or bad lettuce. I mean, that's what they're doing. And so the point is that they'll find it. They'll find the farm which has the infection, I mean the E. coli contamination, and they are going to basically fix it. So when that happens, that's what I'm waiting for in a way, because that's good for 100 points, fast. Shorts covering, all kinds of good stuff. So looking at this on a weekly basis, lows are 450 to 460 if things get from bad to worse. And on a shorter term basis, if you look at it, you notice that this 497, 49, let's say the 490 level holds, 515 here. And then again, if you really want to look at technicals, which really doesn't really work on things like this, it is getting oversold. It's not there yet. Looking at the daily, let's see if it's deep oversold yet or not. Believe it or not, there's a positive divergence going on. So when you have a positive divergence like this, where the price prints lower, remember the price was 535 here. The price was 515 here. Listen carefully. At that point, at 534, we hit rock bottom on the stochastics, all right? RSIs went to like 0.45. We went lower to 515. That's a good 16 points lower. But guess what the stochastics did? RSI actually went up. That, ladies and gentlemen, is known as a positive divergence, where you have the internals not validating the lows in the stock. Smart money is buying. Okay, so I think the worst of CMG is over, unless a couple, you know, what if Beyonce goes to Chipotle and falls down? That case is good for 40 points, I guess, lower, right? So if another celebrity comes up with that, it's going to start to, remember, the more bad news that Chipotle keeps on going, the less effect it'll have on the stock. Think. That's how the market works. Because at this point, it's already discounting an 11% drop in sales. They already warned this morning. So a lot of bad stuff has already come out and spilled out. So at this point, the juice is going to be more to the upside, just so you know, than to the downside. In the meantime, tactical scalps, tactical puts that you're doing, and I might very well join you tomorrow, is fine. It's a-okay, but you have to be very quick and keep an eye on it. So that's the answer to CMG. I will answer one other quick question, wishing as what do you see in small cap? I keep on showing it. So it's, you know, the small cap index is honestly speaking is very sloppy. Is not in my opinion, oil's the major culprit, because so many shale companies and stuff in the Russell 2000. Fundamentally, from an economic standpoint, small caps are fine. You know, rates are rising. A lot of regional banks and stuff are in the Russell 2000. So you should expect to see a bump in the Russell 2000. But aside from that, looking at the daily, you are seeing deep oversold conditions. I don't need to teach you by now that once you get towards these levels, you will get one heck of a reflex sharp bounce. No question about it. Okay, so once we get down here, it might kind of like, stick around, scare people a lot more, create a double bottom like it did here. So once we break the 50, I would be a very aggressive buyer of the Russell 2000 at 1143. At this level, I'll see what happens. Shorting is a dangerous game given that it's fallen so fast, so quick. On the hourly chart, it's already starting to turn, so you could play that. And again, buying tactical 1170s on the RUTs and 116, 117s on the IWMs. I've mentioned that is fine as long as you're ready to average down, because when these moves come, when it moves up these big candles, that's good for almost 60-70% on that particular trade, but you won't have a chance to get in. So the only time that you can get in is by using the tactical charts that I put out there and finding a way of saying, okay, if I'm going to buy here and it slips a little bit more, I'll buy there. But aside from that, it's deeply oversold, and a bounce is likely. However, markets are in that tricky stage right now. So again, you could get 1152 on the Russell 2000s, and do you get to see 1140? I don't know, but if we get 1141, I'll definitely be a big buyer like I was last time. It's a very sloppy chart, let me just put it this way. All right, so that's the best I can answer you. So that's what I see in small caps. 1 second. Okay, so let me sign off. I'm going to put this up for other people to hear, but like I said, guys, you got to do your stuff. I will do my best to help people. That's what I do. All right. And in the meantime, always have a lot of cash on the side, because that's what's going to help you buy the lows or short the highs and do what you need to do. Because if you think you have a one-way bet from here to the end of the year, then you're mistaken, because I still believe we're going to get to the level that I've shown, the 2120, which is not too far away from here, that type of stuff, 2130, but it's going to be one of those, rough sort of winding route, just the way it is. Want to just say the last thing before I leave. When people say, oh yeah, the market went up in a straight line like that, you hear a lot of that, kind of talk. They are all lying. They're all just blatantly lying. Markets don't go up like that. Markets basically wind their way up, and that's why technical analysis is so important. Nothing is in a straight line. Okay, the only straight line is you get days like this when you get this big move up. You actually get more pullbacks, which are more straight line from a angular standpoint, from a geometric angles, right? Than the moves up. The moves up are always more of a 45-degree angle. The drops down are more of a 90-degree angle, which is fine with me. So if you want to see one thing here which trains your eyes to look at things, if you look at this move here, it's the same as this move here. So does that mean that we're going to create another channel that is similar to this? Yes, it's possible. Is it possible that we slip down and test this level first? That's possible too, but one step at a time. But pattern symmetry recognition comes with time and training your eyes and your brain to look at things a little bit differently, and then you start to see. You don't need some guru to tell you that it's wave 4 of this minute, wave 1, 2, and all that garbage. It's not garbage. It's actually great. But you know what? I'm a simple guy. I want to keep it simple. That's it for now. Have a great evening. We'll see you all tomorrow. And make sure that you do your homework, which is simply study the charts and join the group sessions and do the things that are necessary to make yourself feel better and make more money. All right. So thank you and have a great evening.